Welcome back, everybody. It's another bright and sunny one out here. You know, it's been such a dry summer, but it has not been a dry summer for gold. And that's what we're going to talk about today, because gold and silver are still going up. They are still headed to the moon. And right now, gold's at $3,888 per coin. And so it's pretty exciting. And congratulations to all the gold and silver investors out there who have been stacking for a long time. I always predicted that this would happen. Now, you know, obviously markets are cyclical, and, you know, silver and gold, that's what I kind of want to talk about today. How high can the price go? Because we know that the price is not going to continue to go up forever. There's going to be some kind of pullback. Now, when that happens, anybody's guess. Just like it's anybody's guess if the market were to take a nosedive tomorrow. I'm talking the broad stock market. Meanwhile, the Russell 2000 is only up a little bit. And, you know, the Russell 2000 continues to lag behind. So if you're looking for your maximum point of opportunity, I'm going to keep on telling you, it's in the Russell 2000 in small caps, either ETFs or the individual names. That's where you want to look, because the Russell 2000, Russell 3000, I guess, as well, the indexes. One of the stocks we talked about on the channel got added there. TNXP actually was added to the Russell, I think, 2000 index or 3000 index. And so very exciting there. We're going to make some more videos about TNXP. I have not really kept up with it in the last week or two, but I did make a video on it. But today we're talking about gold. So gold continues to hit an all-time high. Silver, I believe, is still in the 40s, right? So it should be like 47, 46, 47. And so I just checked the price of gold, though, and it's about to hit 4,000. Now, I've said previously that we can see gold hit 5,000 plus, 10,000 plus. I mean, it can happen. And so it's just a matter of the inflation we've seen. It's a matter, and the good news is hopefully that this inflationary period subsides. You know, all the debt that people used to be worried about, it's still a very big concern. That's the problem. And so I think there's so much fear in the market in terms of, like, first of all, valuations. You have gold, silver, and ultimately, like, all these, if you think about, when I say gold and silver, like, they're skyrocketing because of all these things in the economy. They are skyrocketing because of all the negative things that we're seeing, all the fear about trade, about tariffs, so there's a lot of factors going into this. What else would be a big fear? You know, the Middle East, everything going on there. There's always the big fear of war that could happen. So what we're looking at is a situation where gold and silver, of course the dollar as well, that's another one that we talk about. And the thing is, the dollar has seen so much devaluation over the last 5 years. Now we're having interest rate cuts. And I'm not even talking about the dollar index, but I'm talking about your purchasing power as a US citizen. So all these factors combined, on top of the fact that interest rates are going down and we have more of a stimulatory environment, because rates cannot stay so high so long due to the debt situation that we just talked about. So, you know, Peter Schiff, people used to make fun of him all the time. He's been right on. And, you know, from 2015, 2016, and he'll probably see this video and say, well, of course I was right on, which is true, you know. But the thing is, like, here's the problem. Like, it took 10 years. Now, I'm not saying it's a bad strategy just only to invest in gold and silver, but I know Peter Schiff talks about emerging markets. He talks about international stocks. So don't just put everything into gold and silver, especially as the market has moved up so much. You know, Peter Schiff might hate me for this, the gold guy who, you know, was made fun of for so long, but he might make fun of me for this, is Bitcoin. I think the supply of Bitcoin keeps on shrinking, the reward for miners, and I think long-term it's going to do well, but we'll see what happens, because it's becoming an international exchange medium now, even though it's still very volatile. But I think the price will keep going up over the next 5 years. I just believe, unless we see a significant liquidity crash in the markets, that's another possibility. And then you have to ask the question, if we do see a big dump, let's say 2026 comes around and markets take a huge nosedive and the AI bubble that we've talked about on the channel goes down, what happens then? You know, what happens if we see the artificial intelligence bubble go down and everything collapses before our very eyes? That's not good, is it? So that's going to be a determining factor as well, I think, with interest rates. And if interest rates keep coming down, if they have to lower interest rates and print more money, well, then that increases the risk of inflation. So then that's even more stimulatory for gold, along with all the uncertainty. So these are all factors that I think are very bullish for gold. Now, some things to consider. Gold has already gone up a lot. So we have a price of gold that has gone up so much that, you know, like I said, your maximum point of opportunity would have been under $2,000 per ounce. would have been, let's say, $1,500 or $2,000 per ounce, because at this point, the price of gold has gone up so heavily that, you know, yes, you can still buy these gold mining stocks at inflated valuations, but if you would have bought them when nobody else was buying them, you know, that's something I always try to remind people, is that there's a point of maximum opportunity, there's a point of, let's say, middle or medium opportunity, and there's a point of no opportunity. And your point of no opportunity is when the stock has already gone parabolic, it's already up, you know, huge. Gold's already gone to $10,000 an ounce. I say no opportunity, but minimal opportunity for growth. That would be a brand new paradigm, 10,000, 15,000. So that's, you know, when we get to those prices, you had your opportunity under 2,000, right? So just remember that. But at the same time, right now, we're not even at 5,000. I've always said we can go to 5,000. So that implies at least 20% upside for gold. 5,000 is a psychological level as well. So it might be a resistance level that's kind of difficult to break. It might bounce off the 5,000 level. We don't know for sure, but we could wait to see what happens when the time comes. And it might come sooner rather than later, because as of right now, gold and silver are still going up. So then, of course, there's the ETFs, the leveraged ETFs. Now, I'm not saying you should do this. This is a risky strategy, but if you wanted to, you could buy a 2X or 3X leveraged ETF. They have them out there. In fact, if you're signed up for Daily Investment Advice Pro, you can look these up in real time, find the ones where they're trading at. You can get a description, learn about the expense ratio, everything about these ETFs. And you can learn not only about those, but any ETF of your choosing instantly, like within seconds. It's right there at your fingertips. So that's Daily Investment Advice Pro. If you're interested, it's in the description below. But back to gold and silver, you know, so it's the leveraged ETFs. Those could go up a lot. They could also go down a lot if gold and silver take a nosedive. But there's a lot of bullish factors. Now, it's also a momentum trade, as I've said, because momentum is one of those things that once it kicks in, it can continue for a lot longer than people think. And just like momentum can continue for a lot longer than people think, on the flip side of that, there's the greed and then there's the fear. When the fear of losing money overpowers the fear of missing out, that can be a very dangerous situation. And that's when you see the market take a nosedive, and that's when you see things really start to unravel. And so when you're looking at a gold stock that's gone up 300% and the price of gold's at $6,000 or $7,000 an ounce, it might be time to start taking some profits if you're up big on that stock. And let me tell you this, I've told you in the last video that small caps are undervalued, and I believe there's a lot of gold mining small cap stocks that, let's say some junior mining exploration stocks that maybe are even in development stage, they're not even in production stage yet, they might do very well also. So there's a lot of opportunity out here in the gold and silver space. And so I encourage you to take a look at these factors, because for somebody, you know, who's looking for those under the radar opportunities where you do have your maximum point of opportunity, that's where I would look as well. And once again, with Daily Investment Advice Pro, you can check that out in the description. You can get access to those types of features. You can get access to instant ETF stock research at your fingertips, get 5 recommendations, build a portfolio from scratch. You can do all of that on the platform. So great tools, great features. We also have a lot of free features you can check out as well. But with that being said, guys, I will probably cut it off here, be a shorter video. That's my thought on gold and silver. It is a momentum trade. There are a lot of bullish factors, but you know, what is your maximum point of opportunity? Always ask that question. Is the stock or the ETF that you're thinking about investing in at that maximum point? And could it result in a good return if I buy it at the current levels? So anyway, guys, thanks so much for tuning in. Hope you all are doing well out there. Stay cool. It is kind of a hot one, and we will see you in the next video. Take care.